Give us a bit of a context. Pre-COVID, during the pandemic, and I can't say we are past COVID. How has your leadership style changed? Tell us a little bit about how you managed your team and how this whole last 2 years have been, especially for your organization.
So see, it's very interesting. First I should thank you and Aarti for having me today. And it's very interesting. These 2 years, I think for me, I think it's both A is the COVID, and the B is also this coincides with one of the biggest change in the companies, which normally does not happen, a change of the promoters. So both have happened at the same time. So I'll try to touch both the things. And also, I think while I think you talked about 2 years as a company, I think over the last 18 years, it's been a very interesting journey, starting from nowhere, taking it to the top, then a little bit, the headwinds, whatever the reasons and all, and I think then slipping a little, and from there, going for an IPO, acquisition of Goldman, then from a pure Indian Gujarati company becoming to a Japanese company. Japanese company, it's a chalk and cheese, differentiation how they operate, and during this period, and again, the only thing that has been constant has been the management team, and the other thing has been, I think the environment has been changing, and how do you keep responding to that? That's exactly the point that you are on. I think so broadly from our perspective, I think October 2018 was the time when the name of the company got changed, and Nippon took majority stake. I think one of the most interesting things was, this is the first time ever a company like Nippon Life, which is, is the equivalent of an LIC of Japan, right, has invested outside Japan without having a JV partner. So that's, I mean, why I say I try to touch that point, not very relevant for your question, but I think it's going to be very relevant from a long-term point of view. Here's a company, I think they've been working closely with the management team. I think their commitment to India, because you have 9 million investors, you have 1,000 employees, and when one of the shareholder goes through some challenges, I think they pump in about almost $2 billion to, which is one of the largest FDI investments in India. Right. But that also tells you two things, I think this business is a very people-oriented business. I think this is the same set of people, who've been driving it, while a lot of foreign asset management companies have gone through different challenges. But I think one of the key learning, I think for Nippon and for me also, while I was a part of the Amphi chairman and various things, and I think it's ultimately all local execution. And a local execution, and I think you need to be driving into future. You cannot be looking into the rearview mirror. So a lot of things that work in your home country and in past, they may not be relevant in future. So I think fast forward, I think from 2003 to 16, and I'm coming to COVID, I'm taking a little time trying to set the context. I think that's the time we acquired Goldman / Benchmark. And why I'm trying to get that context, it's all about, not about changing with the changes, it's trying to preempt the change. So I think that's the time when in India, it was all about active fund management, and everybody used to talk about, the star fund managers, the concept, the halo effect behind that, I think for us, I think what we clearly saw, I think I've always believed this concept of this is different, this time it is different, we are different doesn't work. So I think saying that ETFs are good, are happening, big numbers are happening across the globe, but that will never happen in India was wrong. I think my philosophy was at that point of time, if something is happening in US, is happening across the world, someday it will happen in India, number one. Number two, I've always believed, like I said, it's changing with time is important, but changing ahead of time is even more important. So I think for us, I think the critical thing was at that point of time, how do we ensure that I think before somebody else, whether it's a wisdom tree, iShare, somebody comes, why should we not capitalize this opportunity to build up this business? So that I think for us, it does not matter. The investor decides what he wants, I think, but we should offer everything. So I think that was a philosophy, Similarly, I think I think also as we started the journey, we were one of the few ones which did not have a bank as a sponsor. And at that point of time, it was a big handicap because when all the big ones are sponsored by a bank. I think we started building up our business. So we said, I think, yes, if banks are not there, I think we'll build up the retail and the IFA network. So effectively, I think, again, while at that time it was necessary to have bank as a sponsor or a partner, we did not have, we created a weakness into a strength. Similarly, coming to the COVID times, now moving fast forward, effectively, I think when COVID hit, I mean, let's be between us, yeah, no one else can say this is that one change we could see. Nobody knew, even I didn't know, nobody knew the word COVID till, December of 2019. We were hearing it's happening in, I think we used to see it in TV in China, something is happening, some, flu kind of a thing, whether it's SARS or something, but nobody had a clue. But again, I think from our perspective, I still remember 17th of March 2019, 20, I think we took the decision to close our offices. And for us, I think one of the most important things was, again, it's not about change will keep happening around you. And I did earlier to Arti's point, what I said, it's everything has a context. I think change is going to happen. You can't do much. I think one shot you had, your branch network was closed, your offices were closed, everything was closed. And here we were on a path to recovery, after the shareholding change. But I think one good thing has been, we've been investing a lot in technology over the last 5 years. I think, and my philosophy of trying to disrupt yourself before somebody disrupts you somehow has been helpful, and whether it was active versus passive. And also same was the strategy while we were the largest in retail distribution. Way back, about 5 years back, we hired a team from Snapdeal. And we said, at that time, I think let's try to hire a team which does not know anything about mutual funds. Because I think they should come with the mindset that what does the investor want? And today, I think as we stand, 52% of the transactions that we do are all digital. And while our offices were totally closed, from a business point of view, in the last 5 years, last year was the best year for us. And why I say best year, this industry has a fallacy of many times it's only market share or various things, but the qualitative growth comes from how many retail investors you're getting. Last year, I think out of the 20 lakh new investors which came in the industry, 9 lakh came to us. And this was after the brand change, a lot of things. A very high percentage came through their digital. So I think from my point of view, I think coming to your question directly on the management style, I think for me, I think one thing, I'm a leader. I think, and this is something I'm going to do maybe for Aarti, it's the same thing she'll remember in Business India. She interviewed me in 2011 at that time. I said this, my intuition has never let me down. I believe data is very important. Data and intuition both put together. I think you can, you get it right. Only data many times cannot predict that. So I think, and I think the other part, I remember that, Aarti, very well.
I remember. Very interesting interview.
That was a very interesting interview.
Yes.
And I still, I think I strongly believe as leaders, I think you need to be backing people. I think for me, my management style is that I think I like to back people. I'm not someone, I think it's, and why I say this, I mean, the fact that I was at the age of 36, I was the youngest CEO in India. Somebody backed me. Somebody took a chance on me. At the age of 38, I was the youngest, AMFI chairman. So somebody backed me in. I mean, I did not have the experience or the track record. So I've continued believing in that philosophy. You need to back people. You need to give them the platform and the environment and let them flourish. So here also, I think for us during this period, one of the biggest things has been, I think I believe that I think whether we're working from home or in office, it does not matter. I think we interact. I miss, and I'm a person who likes physically meeting a lot of people. I think I have, for me that I miss that part, patting someone on the back, because these things don't happen, on the video calls. But one thing is there, the fact that I think as a leader, I've believed everybody is good, everybody is right, everybody is giving his best till the time he does something wrong, So I think that's why I think from my perspective, this period, it's no change. Why I said, I think even when I was sitting in office, I used to never go and check every day what you're doing, how you're doing. I think I'm more result oriented and trusting people. That has been my philosophy. So I will never try to go deep into it. For me, the end result done in the right manner. I think a shortcut is one thing is I'm strongly against. And the process, as long as the basic framework is there, I think the freedom within the framework is my management style. So that continues. And so whether you're working from home or whether you're working and they're sitting in the same cabinet does not matter. Sorry, a long answer, RC, for a short question, but I thought that will set the context around.
You've spent a long time, 18 years in this industry, and I'm sure you have an envious record of knowing the consumer, right? Multi-generational consumers would have come through. Give us a perspective of what you experienced from an investor point of view, and what kind of an investor are you seeing now? So a journey of sorts probably will help us.
So I think it's a very interesting. I mean, this is the investor behavior keeps changing. Mm-hmm. The needs keep changing. But I think one thing is unique that I think it's as a CEO or as a product manufacturer, let me put it this way. I have to always keep thinking, will I be investing in it? Will my father be investing in it? If it's good for me, it's for my family, it's good for the investor. So that is number one. I think if you do that smell check, it's very easy. It's not very difficult because you cannot go and check up what 10 million investors in a country like India. People will always tend to save for generations. So what happens, and why I'm trying to touch this is, you'll rarely see any parent who will be saying, I want to go and spend all my money, man, I don't want to save for my next generation or future. No matter things we say will change, but it doesn't happen. And why I say that is the biggest, that's the biggest thing that you have to evaluate. People who are saving for the next generation, they want basically, they're not looking for superlative returns. They're not looking for the crypto country or the Bitcoins and all this stuff. What they want is very simple products, which they can understand, which are easy to explain. And the biggest thing is, I think they have the visibility that I think they're liquid, it will be available when they need it. So for me, I think so. One thing that has been universal across, and especially for a common man, has been they're never looking for something extraordinary. I think the way we try to position it, this fund has given 87% return, this fund has given this. So I think I still remember there was once an advertisement, a full page advertisement given by an asset management company which said 100% of our funds have beaten the benchmark. And the next day, my father called up from Chandigarh and asked me this question, Sundeep, what is benchmark? And I explained him, the benchmark means every fund is supposed to have this. And his logic was, I have two options, either to keep money in the bank deposit, bank or mutual fund. So if you were to ever say that market is down 10%, I am down 8%, you have beaten the benchmark, that is not what I want. For me, benchmark is FD would have given you 6%, is 6 plus. So the human psyche, I think, is a very different thing you have to understand. So that's why I think, to put it very simply, the key thing lies in this industry is to keep the products as simple as possible. And in financial sector, many times it is fashionable to complicate things to justify your existence. Everyone complicates simple things. So I think the best thing is how do you keep it as simple as possible. So I think there are many times for a lot of these, our own internally, product communication, when we try to do within the company, we try to ask some of team members, how will your 10-year child see this? Can it understand? How will a 15-year teenager see it? Because I think it's very easy to talk of R2, Sharpe ratio, this ratio, which half the people after 20 years in industry don't understand, and you expect a common man to understand that. So I think how to keep it simple is the key. But again, one thing I think over the years I've seen is people will always be looking for consistent returns. Number one, people look for liquidity. And when I say liquidity, I'm not saying people will not invest for a long time, but the comfort that I can withdraw the money, I think it is available when I need it. So even the loads are not a constraint to that, but I can withdraw when I want. That is critical. And there will be 5-10% of the people who will be always looking at exotic products, these flavors. But majority of the people, I think they do not know this. I mean, it's an inherent demand for wealth creation. And for them, it is all about goal-based investing. They don't realize it. But in common, a common Indian will always say this, I'm saving this for my son's education, for my daughter's education. In financial parlance, we use the goal-based planning, goal-based investment. But those guys are smart, they're already doing it. So the key is how do you keep it as simple, and believe me, to keeping it simple is the most difficult thing. So I think it's, So I mean, I would say the investor behavior is getting, investors are getting more educated, are getting more educated. They are becoming more tolerant to volatility. And the overall environment in the country, and now mixing with and adding with the COVID part, I see savings will go up. So I think clearly, I'm sure you and me now will realize that I think maybe we do not need to buy new shirts and all, because we hardly go out. I think earlier we used to go out for holidays. All those holidays are gone. So I think what do you do? I think ultimately this money is going to be coming to our bank accounts, and human psyche is right now, let me save a little more. We are still away from a very Western concept that I do not know how long I'm going to live, but let me live, enjoy my life. I mean, I'll see, how does it matter, so why should I save for my kid? After 18 years, he's supposed to step out of his house and, you take your own loans and do it. Last week, I was reading a very interesting tweet from somebody in US. Someone said at age of 26 that I'm so happy, all my loans, education loans have been cleared today. Now look at this, interesting. A kid there is taking a loan to study. Here, I think how many of us took loans to study? Our parents were funding it. And even right now we do it. So why I say this is, we'll continue saving because of the social dynamics in India. And I think this is something which I think in India and China, I mean, if you see, and why people see, many times we call asset management, IRR, various things. There is a very deep science behind it. You have to know the psychology of people. Why are people investing? They're not investing only for returns. They're investing for a reason. And if you understand that reason, then I think you'll understand what is their behavior. So they're not looking at, that this year mid cap is good, next year this one is good. These are all. I think they're investing without knowing it. It's a goal-based planning. And so it's very simple. It's not as difficult, but consistency, no risk, no volatility is the key.
That's very interesting insight into Indian consumers. Sure, and yeah, as you rightly said, consumerism is not there in India as prevalent is in the US.
Oh, I'll just give you a very interesting example. Again, let me go back. Way back in 2010, we started SIPs of 100 rupees. Now it's again when we started, was it viable because of the transaction cost and all? Answer is no. But it's again psychology. It's the sachet strategy. So what happens is, you want people to start, and once they start investing, and they keep topping it up. So that's why I said this business, especially the mutual fund business in India, is you can, while we can call it as a financial services, I would reclassify it as it's a financial services FMCG company. So I think it's has to be good product. There you have to understand the need of the investor. You have to reach out. And ultimately it's about execution. If it was so simple that I think it was only returns, and I always take this example, ever since the private sector banks have come to India. So let's go back, when I think in early 90s, ICICI and others came, SBI Bank has always given 1 or 2% return lower than all private sector banks. If returns mattered are the only thing, the entire deposit should have gone there, but it does not happen. So there is something more. So the secret sauce is a lot more. It's brand, product, execution, relationship, and psychology. So it's a mix of multiple things.
Yes, 2%. I think 2 to 3% is the total population in India that invests in a financial instrument like mutual fund.
2 crore 30 lakh people in India are investing in mutual fund.
That's a precise number you have.
Precise number.
Correct. Excellent. What do you think stops people from moving away from real estate and growth?
So I think that change is happening. If you were to look at it, what happening is when the interest rates are high. So what happens? People like to invest in hard assets, whether it was real estate, whether it was gold. But the trend has started changing. I think again, I will not like to go for a minute. Let's keep the numbers and data out. But if you were to do a smell check, you were to go to small cities and towns. Mutual fund is not an alien word, what it was 15 years back. So today, I'm sure if you were to do a dipstick around you. So my 6 months back, my driver told me, "Sir, aaj maine apni SIP start kar li." I mean, for me that was a very high. I would never have pushed him to do it, but he himself saying, "Aaj SIP start kar li." That's something it's going down. And again, like I said, wealth creation is an inherent need. Many times it is not felt. And I think we have to understand one thing. I think if from India, Today we are roughly about $2,500 per capita income. What will happen is as we go from 2,500 to 4,000, 5,000, you'll see people spending a little bit on lifestyle. Because I think we've become as a deprived country. People want to somebody who had a two-wheeler will like a car, all these things. But immediately after going for the basic minimum, you'll see people, because we don't offer social security system, unlike I'm in the US or the Western world. And as we go from 2 to 10,000, all this money will come for savings, because I think because of the reasons that I mentioned earlier. So now what is happening is you don't have a social security system. Your lifestyle has gone up a little. Now you want to give a better lifestyle to your children. So what do? Now I think effectively you're going to be investing more. And the real estate story and the gold story is over now. So I think for me, I think I will never like to invest in real estate. I think I believe it is such a nightmare. The managing real estate, I think other than what you have, but for investment, it's a nightmare. Leasing it out, doing that, and then liquidating. Today fact remains, it's not easy. So I think clearly the trend has changed. Had it, even during this COVID period when everything was in a lockdown, technically with branches were not, even that time you saw the industry adding new investors. For us, I shared with you, we added about 9 lakh new investors. And this could be for us, I think the number is high because there were a lot of investors who were sitting on the sidelines during the earlier Reliance time, who wanted to come, but due to whatever those crises and all did not come. The moment name changed and everything stabilized, things, those investors came back. So, but I think so it's effectively, I think it's going to be, we are just waiting for it to just the uptake to take place. And everything is in order right now. And the biggest thing is, what I see, I think there's another many times you have to do a very different spell check. It's not to do with just the AUM and the numbers, I was doing this analysis, I think every time market, whenever it fell more than 1%, how many calls do we get in the call center? And why? That tells you how much people are panicking. So, so if earlier it used to be, 1% market falls, people will call, what is the NAV? Kya ho gaya? Ye ho gaya? Because NAV comes at 8 o'clock, people call up 8 o'clock, the panic spreads, and now it's normal. So again, many times, and this is also linking to the management style also, many times it's not just the data. I think there are softer parts around it. I think you have to keep, evaluating, I think, which give you a bigger perspective. So I think I'm somewhat bullish, very excited. I think the time for the Indian asset management industry has come. This 2.3 crore investors, if you were to see, I will not be, for me, the way I see it is, I think time is not far away where 25% of the Indian households will be investing in mutual funds. So if you were to look at today, we are talking of without Jandan and others, we are about 26, 27, 30 crore bank accounts. So I think if you were to look at from our perspective, if you see every household having 4 families, and it is not everyone, is going to go. So I think moving from 2.3 crore to 10 crore, I think it might happen in the next 5 to 7 years. And again, let's go back to the numbers, again, every year, I think so in India right now, there are 20 crore two-wheelers on the road. And I keep, giving different analogies to the whole thing, So I don't understand why anybody who's driving a two-wheeler, and typically two-wheelers get replaced every 5 to 6 years, the person who's buying insurance, maybe as per law, but why that person, if he's paying EMI, will not invest in SIP? So I think it's a question of, just a question of awareness, and these things are changing much faster. If it was not COVID, I think we would be at a very different level. And but again, I don't see the growth story as derailed. I think growth story is only getting stronger day by day.
That's really insightful, especially the part where you said, every time the Sensex falls, the number of calls you used to get earlier versus now. So that shows that Indian investor is maturing.
Yes.
So it's again, things keep changing. So what happens is when you are new, you invested for the first time, and the first time you see market, tanking. I mean, we all know market has fallen 500 points. There used to be panic. Now on the lighter side, even the business papers don't have this top story. 10,000 crore market cap, wealth eroded in a day. Now that also doesn't come, you see. See, because it's now become a part and parcel. Everyone is maturing. So earlier you used to see in the yellow papers, the morning headline was 11,000 crores of wealth, investors lose 11,000 crores. As if it was in anybody's pocket. It was nobody's pocket, it was just a mark-to-market. But I think everywhere investors are, everybody's getting matured now.
Of late, we are hearing a lot about index investing, ETFs. I think you were pioneers in introducing ETF and indexing. Right? So a lot of investors I know are moving away to index as an option. What are your thoughts? What are you seeing in the market? Is this a tectonic shift, or it's the maturity that is driving it, and new people will come in and continue using your current?
So I think the way I see it is, I think let me again go back to when we acquired Benchmark. What was the thought process? Because that thought process continues now also, because today's become more fashionable. And the good thing is, out of every 5 articles, so I was checking nowadays, which come in the yellow papers, at least one is about active, is about passive or ETF. So which is a big shift, which is happening. But again, let me go back 5 years back. I think our thought process was, I think we need to offer what the investor wants. We need to offer what is right for the investor. ETFs are not, they do not have the fees that an active fund has. Mm-hmm. But I think our approach has been a little different. I think as long as we offer what is good for the investor, it's going to be good for all the stakeholders. And I think I still remember going on record when after the acquisition of Goldman Sachs that the large cap funds will be the first challenged by ETFs. And again, our philosophy still remains the same. Our philosophy is, firstly, we are not here to decide what is right for the investor. Investors are matured. They are matured or they are getting matured because of the knowledge, information available, electronic media, and also because of advisors. Now, if somebody wants to move to ETF, it's our duty to offer it. And we cannot think that it is not very good for our P&L. So now coming fast forward, the way things are happening at this point of time is, you have with the highest number of demat accounts getting opened, along with awareness increasing, we have seen ETFs becoming a little more, popular. But along with that, also we are seeing the maturing of a lot of HNI investors, earlier who now decide to take tactical calls based through this ETF. So let me give you this. Today we have Nifty. We have about 20 ETFs, but now there will be times. Let's take we have a banking ETF. It can go from, unlike a normal fund where it is very stable, it can go from 1,000 crores to 10,000 crores and come down. So people want to take a view. So that's what I think we are here as an asset manager there to provide that view to people. That is number one. Secondly, I think again the gold ETF, and also we have market leadership in 4 different ETFs. Number 1 is Nifty, 2 is gold, 3 is banking, and the 4th is liquid. So the approach is very simple for us. I think we'll in this our approach is continue offering products. Let the investor decide. So let me give you extend this from ETF to passive, and then from passive I'll move to international. So now there is being, I think we were one of the, one of the innovators in launching a passive flexi cap. So what do you mean by that? I think there is again this aura of this fund manager can do this, fund manager can do this and all. I think we said, for a minute, forget everything else. I think let's try to create an index, do an average of what these guys do, and just invest in ETF. Now, I think today there is a attraction. The approach has been to on active. There are people who want active. There are people who want a low cost product. We'll offer that. Similarly, I think extending this, to what people want, along with the international products which are there, which are the regular US and all. When I'm not going to be talking about it, our thought was there are enough number of people who have views. Now, I think so. What we are doing is like ETF now in international, we are trying to offer unique opportunities to investors. So let's take India's only fund to invest to take advantage of Japan, only one to take advantage of Hang Seng, which is China, Hong Kong and China, and now Taiwan. So I think our approach is going to be, and there are going to be different set of investors. Now coming back to the starting of your question, now I see this as a pyramid. So the base of the pyramid is going to be guys who are going to invest 500 rupees, SIPs and all. Their approach is all goal based and is a very different approach. And the top of the pyramid, and I use the top 2%. They know what they want. They want to, gold is, is $99 to announce today. I want to take a view, positive or negative. The Nifty has touched 1500, has crossed 15,000. I want to go short. I want to do this. Whatever you want to do. So these people have views. So we are trying to create a portfolio and a business by offering everything, not deciding what should be pushed because this is our view. And I think from a long-term point of view, I think it again boils down to the story. We are no one to decide what is his risk appetite, what is right for him. We are only here to offer. And I think we continue offering that.
We are seeing other funds coming out with US-centric funds, but you've been always unique in that you have a Asia-focused fund. Is that a choice? And thanks to Nippon having good research and all that backup you have, or are you looking at offering US or Europe?
We have US. I did not talk about it.
Oh, okay.
I chose not to talk. I think I'm talking of differentiated strategies. So again, I think that's what I think I'm trying to highlight now. So let's look at this in Taiwan. I'll give you an example. It's so interesting. If you look at any investor which is investing in emerging markets in Asia, so China, India, and after that investments are in Taiwan, the third largest. Now, what is the logic that there's no access given to that to an Indian investor? Now, similarly, I think we launched the first IT ETF. Now, there's so much euphoria about IT, but there was no IT ETF. So now again, Hang Seng, it is a very interesting, there is no product in India which can give a rupee exposure to some of the largest companies in China. We are not here to decide whether you should invest or not. But now, if you want an exposure to Ping Yang, if you want an exposure to Tencent, that is, there's a high weightage in that. And that's why I use the word, I think this classification that we have done, I think from our perspective, I would like to, when we try to work out the strategy of the company, we do not try to define it basis what is in the financial parlance, active versus passive, geography, this. We try to define it basis the consumer. Now, 2,000 rupee guy who's going to be investing 2,000 rupees a month, his need is very different from somebody who's investing 50 lakh rupees per month. And our approach is basically basis on that. So I think for us, investor comes in the center. Different investors will have different things, and that's exactly so. I think for us, let me give you go the other extreme. The approach, the marketing approach, the marketing material that we use in Gujarat could be different from what we use in Kerala, could be different from what we use in northeastern states. Within Gujarat, what we use in Gandhinagar compared to Rajkot could be different. So I think the biggest thing is, I think my learning has been that I think to be successful, I think you cannot see investor as a data point. I think every investor is unique and you have to understand what he wants. And this is where a lot of global companies have gone wrong, whether in financial service or other side, on the other aspects, trying to plug and play what works in overseas will work here. Right. It worked there, let's do it here. Right. So it doesn't work like that. So I think from my point of view, the way that's why purposely I'm trying to, touch too many points together, but I'm sure you'll be able to get the gist of what I'm trying to say. Yes. You need to keep the consumer in the center and look at what he wants. Now the 2000 guy wants a simple SIP. He does not understand. You're talking to him. I have my view on IT is this is this. All he needs is 2,000 rupees lagana mujhe. I want to make 50 lakh rupees over 25 years. That's it. He's given to you, trusting you are expert. Right. Now there is the other guy going to the other extreme. When I talked about Hang Seng or Taiwan, he knows what he wants. He knows basically, I want to go and do this. So, Mr. Nippon, can you give me that access? That's the only thing he wants. I cannot tell him go, and I'm not here to advise him. Please invest in Japan or China. So I think so. The approach is the investor-centric. Keep him the center, and do not try to paint every consumer with the same brush. Everyone has different way of thinking, different needs. The core remains the same, but I think the way he sees risk, the way he sees products, and the way he sees our industry is different. Over the years, a lot of people ask me this question, Sundeep, I think what is the key to build up a successful asset management company? Mm-hmm. I can complicate it as much as I want, but I think I just say a simple thing. It's the easiest business. It's the easiest business. All you need to do is keep your eyes and ears open and understand what the investor wants, and respect the fact every investor is different. and every investor is different. Don't try to go this thing. And that's why you cannot say I'm in asset management for 300 years. I will from Boston. I can tell you what works in India. It doesn't work like that. It doesn't work like that. From Bombay, we can't tell, and I'll tell you this example, there's so much difference in the investor in Bombay versus, I'll give you, I come from North, come from Punjab, Chandigarh. Today, someone in my own father, he will like to visit a branch, talk, pampering is something that helps him. In Bombay, you cut and dry and you say, I want my business done and I move on. There's a difference in approach. So that's the way you design your branches. That's the way you have your staff. That's the way you train them. I'm just trying a very simple approach. You cannot, in Bombay, you will just say, give the application and thank you very much and you move on. And before taking the application, you have to talk 10 things. How are you? How's your son? How's this? And everything. Without that, it doesn't work. Right. So I'm just trying to give you, this is just a example.
That's a street view versus a helicopter shot view, right?
Sure. So it's like saying, on a lighter side, when a lot of people think he's sitting in BKC, if it rains in BKC, they say it's a very good monsoon in India. So I think the reality is very different. The reality is very different.
Tell us a little bit about your investment approach to stocks. What goes behind your research process? How do you find the next Nifty 50 stock?
So I think it's a very good question, and I think very apt, especially because I think as we are going through this change. So I think over the years, I think we've been changing, and then I'll tell you where we stand today and how we want to be seen. 10 years back, I think, or 15 years back, I think if you had asked me this question, I would have told you we are bottom-up stock pickers and opportunity investors. We see wherever we see an opportunity, we'll invest. That was the view 15 years back. As we talk today, I think my answer to this will be our approach is is an institutionalized approach, number one. Number two, by design in the company, we do not have any face. And I'm again repeating this. By design, we do not have any face. It's a faceless organization. What I mean by that is we don't want to have the halo effect of a fund manager. I think there is a process and the process has to be followed. And for me, I've been very, very interested, and I think understanding how companies in Japan. So let's take Nippon Life, a 130-year-old company, and 130 years, so much has changed. How the processes become so important part of the running the company that it does not matter who's there or who's not. I'm not trying to say that people are not important, but I think from a bigger point of view, what I'm trying to say, processes become important. So from our point of view, right now, we're a mix of two things. First, the basic philosophy is it's a very highly institutionalized approach with the risk management coming to the core, having very strong framework and freedom within the framework. So, and I'll try to define it what I mean. So we are trying to implement a lot of factor analysis. So what you can invest, where you can invest, but there's a complete freedom. So an example, we will never like to take a scenario where assuming financial services is 25% of index and we say we will be zero. No, we cannot be zero. Because today the type of investors we are looking at, I think for them volatility, you can go right once, you can go right twice, but you can also go wrong 10 times. I think how do you have basically risk adjusted return? That is exactly is also getting reflected in the fact over the last 3 years that tracking error is just coming down. So by design, we are working on, if one line, strong bottom-up stock picking, but after that, it is with a very strong overlap of processes, institutionalized approach, and then freedom within the framework. So I think what we believe is this is both an art and science, but it is not purely, that I think, because this is the fiduciary money that we are managing, there cannot be a fund manager bias beyond a certain point, that I don't like this, so I will not invest in it. So it's a very, very, so unlike some asset management companies in India, where I think it's a very high personalized view, So I think, so we are trying to reduce the bias with the very strong framework and trying to get the best of art and science. Complicated answer what I've given you, but I think it's believe me, it will make you understand, in times to come, it's an approach so that does not matter who's there. But I think the basic stuff will always remain the same. Again, this is a very interesting thing. People, I think all of us who are from capital markets, we see things very differently. This is again the same example of what I told training in BKC. But I think when you go to a small town, for him, it does not matter who's managing. I think, is there any volatility or not? Is he achieving what he wants to achieve? I think that's where I think we confuse it. And I think all of us being very close to, capital markets, try to look at the portfolios very differently, the people who manage it very differently. And again, I go back and I've been so impressed when every time, I've been talking, to my colleagues in Japan. How is it that I think over 130 years, the basic philosophy remains the same of the company. People in 130 years, by law of nature, so many people are not there, but it remains the same. People keep changing. People keep changing in different roles, but it's such an institutionalized approach. So I think that's again something. So we are trying to, if I can use the word with this integration, we are trying to get Indian passion and Japanese perfection. If you were to get that word, I think there is a very different passion that we have as Indians, and I mean, at least this team has. I think we want to go there, and there is the perfection and the process orientation. So I think I earlier talked about the change in shareholding. The one big change will be, like in any Indian company, many times we'll be planning, let's have this meeting tomorrow, this, that. I can tell you in my calendar at this point of time, there are meetings for 2024 also, so that's the way it is, planned. So it helps. And I see if you get the right mix of localization and getting the process orientation. So that is something which, helps. But again, I'm trying to match it with take it to your question, which you talked about management style and with COVID. But I'll say without COVID also, my big style that is changing now is to build long-term global organizations. I think to have very strong processes and institutional approach is very critical. It has to be beyond individuals. And that is, I think, what we are trying to create. I think we are trying to create, while we talked a lot about only mutual fund, I think as a team, we are trying to create a global player out of India, which is not only be only a mutual fund, which is going to be private equity, AIF, real estate, and a lot of the other things we have started doing. But right now today we're focusing more on mutual fund. But I think the approach will be, we want to be a true blue asset management company. Mutual fund is going to be one important part of it. ETF, AIF, offshore money, venture fund. We launched Indo-Japan startup fund, which was inaugurated by Prime Minister Modi and Prime Minister Abe there, and that is about getting foreign Japanese money into Indian startups. So these are a lot of things which are happening, and I think you'll see us play a very different and a very big role in the Indian both listed and unlisted space in times to come. And this is just a starting of a new journey, which is going to be much beyond mutual funds.
You said you want to become a true blue asset management player, AIFs. These are things that, probably are new to India. What are you planning for India? If you can just briefly tell us, and probably we can add that.
So I think the way I see is in India somehow, I think the moment you talk of AMC, it's either 90% people think it's mutual fund, number one. Or when you talk to somebody else, he'll think it is AIF, because it's all, fragmented. I think from our point of view, this comes from the genesis of, I think what I talked earlier, you have to see every investor differently and the investor needs are different. So today, a 5,000 rupee guy has a very different, wants a mutual fund. Someone who graduates wants a ETF. There is somebody who wants, whatever I talked about, the mutual fund investment thesis that I talked about earlier. But there are investors, HNS, who don't want that at all. They want absolute conviction, high conviction products. They're saying, I'm willing to wait for 3 years and without return, but for that we have AIF. Then what we're also trying to do is trying to leveraging Nippon Life's network, trying to get a lot of offshore money into India. So let me, give you example, the names, where all what has happened, so that it gives you an idea. So first, I think we have launched funds in Japan. So to Japanese, giving a Japanese investors an access to India. And then after that, I think we have given, so that is on the both the bond and the listed space. After that, working closely with Bangkok Bank, which is the largest bank of Thailand. Nippon Life has a 26% stake in life insurance company there. So I think they are already selling Bhartiya Fund. In Sanskrit, as it's called Bhartiya Fund. It's sold by 500 branches of Bangkok Bank. Recently, you have read about Taiwan. Cathay is the largest financial asset management company in the financial group in Taiwan. Nippon Life has a special relationship with them. So again, I think the idea here is two-way, to give Indian investors an access to Taiwan and giving Taiwanese investors an access to India. Similarly, we launched our first India ETF, first Indian ETF in Australia. You will also see Nippon Life is also one of the second largest shareholders in DWS. In Europe, and I think we are evaluating, again, too early for me to say what, I think evaluating what we can do. And Nippon, again, in the US also is a 26% shareholder in TCW and Putnam. I think we are evaluating. So I think the idea is, like I said, it's going to be a very different play. A domestic mutual fund, AIF, getting offshore money into India, then moving ahead. Also, this talk was more on the listed and the bonds. Then moving ahead to unlisted space, we launched I told you, Indo-Japanese technology fund. We launched 2 real estate funds in Japan. And I think, again, the whole thing continues. So again, it's a very interesting thing for us. I think if you have to ask me, mentally as a company and for me as a CEO, I am right now running 3 different strategies. Regain what we lost in the last 2-3 years. Reinvent ourselves in the present environment and recreate for future. So it's a regain, reinvent, and recreate. I think we're trying to run 3 different strategies. And I think, and from our perspective, everything, I think then coming to the point on True Blue Asset Management Company, we see an opportunity everywhere. So we have different teams we are creating. So I think maybe 5, I think there's no Indian asset management company which has done this, because everyone has very vertical approach, or if they have it, also could be part of the group company somewhere else. So I think you may, if you were to ask me years from now, I think not to be quoted for this discussion interview, but we can become potentially BlackRock of Asia, active fund, iShare, private equity, various things, and it happens to be in the asset management industry, Larry Flynn happens to be my idol. I think it just happens to be, I think, so I mean, that's why I said it's a very difficult to visualize what we will be, but I think it's going to be.
You sort of read my mind, because my next question was, are you planning to be the BlackRock of India?
So again, I'd say many times, I see what I've realized is, it does. You need to know your destination, but it's all building. So many times you have to keep changing the strategy. Maybe if you will talk 2 years later, I might tell you what we discussed last time. I realized out of the 5 things that I told you, 2 things, did not make sense. I think so we dropped it midway. So it's again, being very, very flexible and nimble, is very critical. And I think one thing that has also worked for the company and for me, I think along with passion, I think we've been very, very closely looking at the opportunities all around us and reacting very fast. And also this philosophy of failing fast. There will be few things, I think we all get excited. We're human beings. Not that I think we should never believe that I know everything. And our bias comes into it. There are times we get into something believing this will be good. But I think the moment you realize it's not what you thought of, I think the idea is to move on, park it and move on. I think what I've realized is many times leaders, especially, get married to their own thought. And even when they realize it also, it's not going the right way. But it's very difficult to admit it was the wrong decision. So for me, I think I'm very clear on that. I think this has to be a practical approach. Not that, and not believing whatever we have thought, what I have thought is right. There will be things we will be wrong. Admit it and move on.
One, we would love to know your favorite books. If during this lockdown, we're all in the lockdown, I know if we were to tell, okay, please, Sundeep, recommend 3 books that has been your all-time favorite. What those 3 books would be?
So I'm going to show it to you. It's next to me. So I'm reading this book. Great. This is one of my. So,
nice. Nice.
So it's a very interesting book. I think if you get a chance, it's good for all of us as professional, as parents, as everyone, that too much importance is given to intelligence. Right. We think the IQ level is this, so, but ultimately it's about the passion and determination to make it big. That is more critical. So it is not that every Olympic gold medalist was born a star. I think the only thing he did not give up. I think so. I think that is this book is about, and I had actually tweeted about this book that this is a must actually for, because many times we think it's about professionals, for all parents and teachers. Because who give so much importance to intelligence and marks. This book tells you that I think so. Angela, she says, my father used to always say that you can't get good marks, so you're not smart. And ultimately, she, she's where she is. So I just thought, so this is one of my book. But other than that, I think I've remained myself, more than books. I keep myself updated. I read a lot, but more than books, I think surfing and my interest are varied. As especially human psychology, I think I try to read a lot, because I think that helps you when you with your family, your team, you're running business, and also the consumer, because it's all about the human psychology.